It's time for another Southern California real estate market update. We're 2 weeks into December, and we're going to run through those numbers to show you whether the market's being naughty or nice. We're going to run through the numbers for single family, multifamily, and foreclosure data for Orange County, LA, San Diego, Riverside, San Bernardino, and Ventura counties. Hey there. Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers and tenants and landlords understand the real estate market so they can make the best decisions. And it's time for another one of our 2-week updates. We're pulling the data right from the multiple listing service so you get it first. You don't have to wait 2 months for Case Shiller or wait a month for it to show up in the news or hear from other YouTubers. It's fresh off the presses right here. We're actually going to play a trick on you when it comes to the foreclosure numbers. We hope it doesn't turn into a lump of coal in our stocking. Stick around to the end where we share briefly what we expect for the 2022 spring buying season. So if you're ready to dive into the numbers for Orange County, LA, San Diego, San Bernardino, Riverside, and Ventura, hit that like button and let's get started. Ho, 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 here we go, go, go. It is time for the 2-week update halfway through December. I want you to look carefully at the white line as we go through when we're talking about single family, and you will notice an interesting trend in every county except for Ventura. And the white line is the number of properties going under contract. So see where that is in relation to the red line, which is the number of new listings that are coming. There, again, is an interesting trend for December. And this will have ramifications going into spring 2022 that we'll wrap up this video and discuss. All right, so Orange County, here we go. First 2 weeks, we can see that things definitely peaked in 2020. 2020 was an atypical year. We did not have any sort of seasonal adjustment in the real estate market. It just kept chugging along. But it does actually almost look like we've seasonally adjusted here. But it's somewhat of an optical illusion because, like I said, look at that white line, and you can see that the white line, the number of properties that went under contract in Orange County, is higher by about 150 plus over the number of new listings. You can see in 2019 we had an overlap and a few more properties going under contract versus those being listed. But 20 and 2021 we did not have enough new listings come to the market. And hey, does anybody happen to remember what happened in the spring buying season of 2020 when we didn't have enough inventory early on? We'll discuss that at the end. Los Angeles was relatively uneventful. We had our 3 lines moving along. You can see that we are at a case now where the number of new listings is under the number of properties that have gone under contract. And that is a new phenomenon. Even in the crazy times of 2020 in LA, there were always enough listings coming, but that's not the case anymore. We actually have fewer listings than properties going under contract, which makes it look like an amazingly crazy seller's market right now, and it is. One more thing to point out is the 2018 numbers. We told you in November of 2018 is when interest rates almost hit 5%, and in the wrap-up numbers for November, you can see what happened in 2018. We had an increase in new listings. We had a decrease in properties going under contract. Well, rates actually backed off from that peak, and in December started to go down a little bit, but we can see that the number of contracts is a record low as compared to the other years that we're tracking here. And that again is because of what happened with interest rates. Buyers did jump back in as interest rates decreased. And Riverside, good old Riverside, we didn't have enough inventory last year and we have even less inventory this year. So you can see that demand is still way up. We have a record number of properties that have closed. You can see that 2020 was an outrageous time. We've backed off those numbers a little bit for the number of properties going under contract, but definitely not enough listings. San Bernardino, another case of fewer properties coming to the market than those going under contract. Now we saw that in 2020. We see it again in 2021. Also, again, take note of 2018 when you see the dip in the number of properties going under contract. Very interesting to see what happened when rates got there. But that'll definitely be a topic of discussion down the road on other videos. Ventura has been a bit of an outlier when we pull data, as you have seen if you've watched several of these, but we do have a case where this is the only place where in 2021, in the first 2 weeks of December, that we actually had a few more listings come to market than those that went under contract. Now, what's interesting, and we did see this in previous months in the Ventura data, is we see that the properties going under contract is actually at a record low compared to the last 5 years. So we saw this a few months ago, then it backed off and it looked just as hot as everywhere else. But interestingly, in December, it's down again, the number of properties going under contract. But because of the lack of inventory, it's still a hot seller's market. In San Diego, yet again, another one with not enough inventory and a whole lot of properties going under contract. So you can see that San Diego is also a hot seller's market where we don't have enough homes. What this will look like in spring of 2022, it's going to look like LA and it's going to look like Orange County. This is one of the few places where you're going to get multifamily numbers as well as single family numbers. So Orange County, multifamily, we have listings that have dried up. So the listings are at a record low when we look at these 5 years. You can see that the number of properties going under contract are still at high levels. So we have a crazy seller's market for multifamily in Orange County. You're going to see this trend that listings are down in several other counties. It is typically this time of year we do see listings slow down, but you can see that they're in many cases going to be at record lows compared to the last 5 years. LA, we have a dramatic drop in the number of listings, especially when you compare it to last year, 2020. You can see that there's still a solid number of properties going under contract, but because those numbers are so close, it's looking very much like a hot seller's market in LA. And remember, LA City and County are still under eviction moratorium. The county eviction moratorium may end at the end of January. We're going to follow that for sure. But the city moratorium, there is not a defined end date as of right now. Riverside, we can see inventory is stable. We don't see the drop off. We can see that the number of properties going under contract is solid. The big, huge swing up in the number of sold properties reflects the hot data we saw in months previous. But Riverside actually looks like it's somewhat normalized and become more of a normal multifamily market. San Bernardino is another one where the listings have dropped off dramatically. You can see too that actually the number of properties going under contract for this time of year is somewhat lower than normal. But because the number of listings are so low, you don't see that. As a buyer, you still see a crazy seller's market for multifamily in San Bernardino. Ventura, I will continue to keep your data in here, even though for multifamily, there's really no pattern. San Diego multifamily, we also have that drop off in new listings. You can see that's at a record low. The number of properties that are hitting the market, still a strong number going under contract. So San Diego is definitely a hot seller's market. A lot of competition right now for multifamily. So to wrap up multifamily in Southern California, it does look like demand is somewhat cooling off in certain spots in SoCal. But because inventory has dropped so dramatically in so many of the markets, you're not going to see that as a buyer. It's still going to be very competitive, and you're going to be dealing with multiple offers due to the lack of inventory for multifamily. Now it's time for foreclosure data. We're tracking this closely now that the foreclosure moratorium has been over for a couple of months. Now we can actually start to see it in the data. And I am starting off with the notice of default month over month for 2021 to show you the dramatic increase we have in the notices of default in Southern California. And when you subscribe to the newsletter, you're going to get a copy of these charts. You can actually click on them and get rid of some so you can change scale so you can see the other areas, because LA has such higher numbers than the other counties in California because there are so many more properties. You can see when you look at these numbers that we have dramatic increases compared to January 2021 to November 2021. Huge increases in foreclosures. Oh my gosh, doesn't it look like the market's just going to be flooded with foreclosures? Okay, so I'm playing actually a little trick on you, and I hope I don't get a lump of coal in my stocking because of it. This is a lesson for you, and I've talked about it before. We need to put these numbers into perspective. It is helpful to look at the month-over-month numbers, and we will continue to track these, but it's partly irrelevant to look at the numbers before the foreclosure moratorium ended in July because there just weren't that many going on. The other thing I did intentionally is I left out perspective. How do these increases in LA over 300 per month, how do those compare to other months? Well, that's why we actually include this data. Here we go, looking at November's for back to 2015, we can see that where most of the counties are, and again, you can minimize any county, most of the counties are at or even below normal levels of foreclosure activity. So those expecting a flood of foreclosures, it's not in the data yet. We're not seeing a dramatic increase in the notice of default, which is the first step. So it's 120 days, 90 days, 21 days. We need first to get a dramatic increase in notices of default before we're going to get any sort of flood of inventory. Keep these numbers in perspective. We're still nowhere near huge numbers like 2011. We were coming down slightly. It still wasn't the peak of the market, but you can see how these numbers compare to where we are today. We're still at much lower levels. And our last piece of the puzzle, I kind of rearranged things just to show you this, is the notice of trustee sale. So 21 days after, theoretically, these properties can be foreclosed on. You can see foreclosure moratorium ended in July. Then we had a spike in the notice of trustee sale going into August and September. And that was low-hanging fruit. These are properties that were vacant or foreclosure had been started before foreclosure moratorium went into effect. Now that we got through some of the low-hanging fruit, October, November, our numbers are down. We're actually not all that much higher than the foreclosure moratorium numbers for the notice of trustee sale. And again, this is essentially the last step before they can go to sale. So we don't have a big increase here. We can't expect a bunch of properties 21 days after to be coming to foreclosure sale. So very interesting to be tracking these numbers the way we are. Oh, and one other important thing, the reason that I'm showing you November numbers, because I'm always harping on getting the most immediate data. This actually is the most immediate data. In order to pull accurate records, there's about a 2-week lag in the data for the different counties for public records. So we need to wait till the middle of the month to be able to pull the previous month's data. So anyway, there you go. Foreclosure numbers, no wave of foreclosures. Do not expect much in the way of foreclosure inventory in the beginning of 2022. Be on the lookout in the next couple of weeks. We're actually going to do a full video on our 2022 predictions for the real estate market. But in the meantime, you could probably tell what I was hinting at when I shared the multifamily and single family data for Southern California. There isn't enough inventory. We're at record low levels of inventory and new listings going into the new year, and we still have high demand. Lots of buyers still writing offers. This doesn't even include any potentially new buyers that will come to the market, which happens every spring buying season. In other words, it is going to be a very, very tough season for buyers unless we get some sort of flood of inventory. As you can see in the foreclosure numbers, it's not going to be foreclosures. It's probably not going to be new homes either, particularly in Southern California because we're so landlocked. Potentially there's sellers who are finally ready to make a move, feeling like we're at a peak in pricing. So we should get somewhat of an increase in inventory, but it probably won't even be to 2019 levels. In summary, it's going to be tough out there for buyers as the spring buying season starts, and we expect it to actually start sooner this year. For more housing market updates that you don't want to miss, make sure you check out this next video, and we'll also link it down in the description below.